welcome back to DoreenGlobe.com. We're going to look at Bitcoin's 20-year outlook. Is it a bubble or a breakthrough? What the smartest minds really think. To understand the Bitcoin 20-year outlook, it's not about short-term price predictions. It's about what role Bitcoin could play in the global financial system over the next 2 decades. The smartest thinkers agree on one thing. Bitcoin is not competing with stocks or tech companies. It's competing with gold, sovereign bonds, offshore wealth storage, real estate used as a store of value, national reserve assets. In other words, Bitcoin is competing in the store of value arena. That is why its potential is so large. When people hear bubble, they think of something that has no real foundation. The smartest Bitcoin analysts reject that idea. Michael Saylor, CEO of MicroStrategy, famously said Bitcoin is not an investment, it is a monetary network. His view is that Bitcoin is engineered to benefit from fiat currency debasement over time. He expects volatility, but not collapse. Lynn Alden, one of the most respected macro strategists in finance, calls Bitcoin a highly volatile, early-stage monetary network. She is very clear that it could fail, but also very clear that it is not a classic speculative bubble. Nick Szabo, who designed the precursor to Bitcoin called BitGold, has spent decades studying money and property rights. His work suggests societies always move toward harder, more reliable forms of money. Bitcoin fits that pattern. Adam Back, whose cryptographic work is cited in the Bitcoin white paper, has said most people still do not understand what Bitcoin actually is. His view is that creating digital scarcity for the first time in history. They are not bubble arguments, these are infrastructure arguments. Why the Bitcoin 20-year outlook is so powerful. The core reason the Bitcoin 20-year outlook is so compelling is simple. Bitcoin is the first digital asset in history that cannot be inflated, censored, or easily confiscated. That combination is unprecedented. In a world of expanding government debt, persistent inflation, declining trust in institutions, persistent inflation, increasing capital controls, Bitcoin offers something unique, sovereign ownership of value. That is why people like Paul Tudor Jones called it the fastest horse in the race as inflation hedge. It is why Stanley Druckenmiller, one of the greatest investors of all time, has said he prefers Bitcoin to gold. These are not tech bros. These are macro legends. Bitcoin 20-year outlook, the scenario framework. Serious analysts do not give single price targets. They think in scenarios. Let's break the Bitcoin 20-year outlook in 4 logical outcomes. Failure scenario. This is the hard truth. Bitcoin could fail. Causes could include fatal protocol flaws, aggressive global regulation, better technology replacing it, loss of public trust. In this case, Bitcoin goes near zero. Even serious thinkers acknowledge this risk. Survival scenario. Bitcoin survives and matures into a digital asset, captures a portion of the gold's market, some offshore wealth. This would imply total market value in $5 to $7 trillion range, which translates to $250,000 to $400,000 per Bitcoin. This is considered floor outcome if Bitcoin simply remains relevant. Base case scenario. Most likely according to smart bulls, Bitcoin becomes the primary digital store of value, a standard asset in pension funds and institutions, a partial reserve asset for some nations. This implies market value in 15 to 25 trillion range, leading to 750,000 to 1.5 million per Bitcoin. This is where the logic of Saylor, Auden, and Druckenmiller quietly points. High adoption scenario, monetary shift. In this scenario, Bitcoin becomes a neutral global reserve asset, a major settlement layer between nations, a replacement for large portions of sovereign bonds as trust erodes. Now you're looking at 50 to 100 trillion value, which means 2 million to 5+ million per Bitcoin. This is the world that people like Balazs, Shiv, and Ashan openly model. Why these numbers are not crazy at first glance. $1 million Bitcoin sounds insane, but from a macro perspective, it is not. For context, global real estate, 330 trillion, global bond market, 130 trillion, global equities, 110 trillion. Bitcoin reaching even 20 million in value is not extreme in global asset terms. That is why Bitcoin 20-year outlook is so compelling to serious capital. what the smartest people agree on. Despite different personalities and backgrounds, the smartest Bitcoin thinkers agree on 4 things. Bitcoin will be extremely volatile, it will have brutal crashes, most people will misunderstand it. If it exceeds, it will be massive. This is not bubble language, but infrastructure language. Why it's not a 1999.com hype. In bubbles, people say everyone's getting rich, it's easy money, you can't lose. In Bitcoin, people say this is risky, this could fail, this will take decades. That's the difference. The Bitcoin 20-year outlook is not built on hype, it's built on monetary theory, game theory, cryptography, and human behavior. The clean conclusion on this is when you strip away the noise, the smartest people in the world are not asking, will Bitcoin go up this month? They're asking, will Bitcoin still exist and be relevant in 20 years? And most of them believe yes. That leads to a simple, honest conclusion. If Bitcoin fails, 0. Bitcoin survives, 250,000 to 400,000. If Bitcoin becomes digital gold, 750,000, 1.5 million. If Bitcoin becomes monetary infrastructure, 2 million to 5 million plus. There is no intellectually honest middle ground. Final thoughts, the Bitcoin 20-year outlook is not a get-rich-quick story. It is a bet on a new monetary system in the world where trust is declining and debt is rising. That is why economists take it seriously, macro investors allocate to it, cryptographers respect it, and institutions are moving in. Bitcoin is not being treated as a toy anymore. It's being treated as financial infrastructure, and that is why the smartest people believe if Bitcoin still exists in 20 years, it is extremely unlikely to be worth less than it is today. Not slightly more, orders of magnitude more. Please subscribe to Terrain Globe, my new YouTube channel, and please visit my website, terrainglobe.com, to get latest financial news. Thank you.